It's the Congo.
All right, we'll come back and focus on that chart that we were just showing you there. That, of course, the president in the briefing room. Wide-ranging comments, of course, tariffs, taxes, even the New York City mayoral race. But we're following a market that is at record highs right now. Bryn, I'll come back to you, and forgive me for interrupting you earlier, but there's a belief, too, that there are not 100% believers in this market yet. And there's a lot of money on the sideline that is going to see what's happening on days like today, whether it's fear of missing out or just want a piece of the action, and money's going to come in. I want you to hear what Rick Reeder told us yesterday on Closing Bell and have your reaction to it on the other side.
You look at the amount of cash that's sitting out there, we were looking at the total net worth of the size of the fixed income market, size of the equity market, globally. There is so much money that wants to come into the market that didn't for a while. And I just think if you don't have any negative news, the natural gravitational pull is across all these assets.
What do you think about what Rick Reeder had to say?
Yeah, well, I think, when we see the cash on the sidelines, we've actually researched this. The cash on the sidelines has actually never come off the sidelines, so I don't think that's a catalyst. I do think, though, as the market has made, the NASDAQ and the S&P made these highs, I think the only people that bought the dip were mainly the retail investors. And so I think that people who were calling for recession, people that were panicking from an institutional perspective, are still very underweight this, right? Because remember, technology was dead just 2 months ago, and now we're seeing NVIDIA break out to all-time highs. And I do think, NVIDIA, which is close to 7.5% of the S&P and 9% of the NASDAQ, this is incredibly bullish that after a year of consolidation, now the largest company in both indexes continues to make new highs every day. I think that's going to continue to gravitate people into tech. But I still do believe, though, as I was talking about earlier, there is this FOMO underneath the market in these small and I'll say mid-cap tech stocks that have really, to me, a lot of them have gone parabolic.
Yeah, if you look at, for example, high beta, Brian, those names are flying, the more volatile names within the market. That some are flagging, the ETF that tracks that space is at a new high. Some would suggest lower quality names like Bryn is alluding to there. If you go to the momentum names, the momentum ETF is at a record high as well. The gains from the April low are extraordinary for the Palantirs of the world, 88%. Nobody's suggesting that these companies are, lower in quality, obviously, but look at the moves. They're just straight parabolic. 88 for NRG and 86 for Vistra and 76 for Vernova and 73 for Broadcom. Some of the cruise lines, industrials. What do we think about that?
Well, I think it's part and parcel what we talked about in terms of the broadening out, number one. Number two, I think why we are positioned for financial sector earnings to be just lights out for the second quarter, Scott, because what does volatility mean for financials? It means that the capital markets business are doing a lot of trading, and the wealth businesses, and Bryn absolutely nailed it. The private wealth people got this right. They've been investing all along and allocating to stocks. So I think financials are set up because of all this trading volume. But look at that list of stocks. We're not talking about the Mag 7 there. We're talking, aside from Broadcom, technically. But at the end of the day, we're starting to see a more broadening out in technology, and that actually has been our call all along for the year. So we think this is very healthy for the market, not just all about momentum.
Yeah, I mean, it's a Robin Hood kind of market. Target goes to 96 from 64. 96 from 64. Show the stock, guys, please. Reiterated buy at Compass Point. There it is. I mean, it's blown past 64, so you just chase it up to 96. Kev, that's a name that you've owned?
Yeah, both Brent and I have Robinhood. This is a stock that I just can't stop falling in love with. Everything that they're doing is amazing. The amount of users is going up daily. The AUM is incredible. And when you think about this stock longer term, not as a meme trade or someone playing on their phones looking at crypto, this is an infrastructure for the wealth generation of the next multiple decades.
Bryn, it's a Roblox kind of market. Seven straight winning weeks, up 11 out of 12 weeks, up 58% in the last couple of months, and you sold it.
Yeah, we've been talking about this name. I've owned it for about 2.5 years, maybe a little bit longer. And I think that this is an important conversation. It's easy to buy a stock. You're going to have your reasons, but when do you sell? And so what I like to do is re-underwrite my names pretty frequently, but especially after a big move like this. I love the team at Roblox, et cetera, but I really feel like the stock growth and the financial growth have gotten dislocated. And so whereas the stock is up, to your point, year to date 50%, over the last 1 year, about 180%, the revenues are only growing about 25%. There's no E in the name. And so this is where one of those names that I just think that I've had a great run. I don't fall in love with stocks. And in fact, I know the data that over very long periods of time, over 50% of stocks don't even outperform a 90-day T-bill. So I thought it was time to move on. I think the stock is ahead of itself. And so we move on and find other names that I feel are undervalued.
Steph, it's a quanta services market, up 54% from the April low. It's a GE Vernova, as we said, market, up 76% from the low. It's an Eaton market, up 41% from the low.
I have a basket, as you know, but they've all really...
You know what? A lot of people have baskets now of these kinds of stocks because so many stocks have parabolic moves like the ones that I've documented.
Because it's all about, it is AI. It's an AI play. AI, data center, grid, and then power. And we have 1.7 trillion mega projects out there, and only 16% have been completed. And I am a firm believer that we are going to see 4 trillion plus in spend on electrification between now and 2050. That's a long ways to go, but it's such a momentum and a tailwind for these companies. And they have record orders, record backlogs, margins are going higher. And I just think this is a different way of playing that NVIDIA theme. And you know I own Broadcom, but this is a different way of playing the AI space.
It's, Brian, a financials market. That sector hitting a record high today, on track for the second positive month in a row. Month to date, just month to date, right? We're 3 weeks in. Goldman's up 14.5%. Citi's up 12. You have that. You have JP Morgan, which has been at a record high. That's up 9.5%. B of A and Wells on that list too, 7.5% and 7% respectively.
Yeah, we own all of them for very different reasons. But again, I think it's going to be a bang on and very surprising second quarter earnings period, Scott. But also, as mentioned earlier, about climbing the wall of worry. Man, from the institutional perspective, my institutional accounts around the world have been underweight financials in the U.S. They have not participated. So going back to your original theme that we talked about at the top of the show in terms of fear of missing out, I think there's going to be an increasingly fear of missing out trade in financials, especially when they react to the earnings that I think are going to be absolutely stellar.
Yeah, and they're coming really soon, too. You've seen it in some of the private equity names as well, which have really picked up lately on this optimism about the market, whether it's IPOs, M&A, and maybe, just maybe, a piece of animal spirits coming in the second half of the year, too. Up next, Pops. All right, we're back. We're showing you shares of Nike here. That stock's a ripper today, up 17%. So, Brian Belsky, you own the stock. We talked about it going in to the print. So you still had the biggest year-over-year revenue and EPS decline in 5 years. The question, obviously, that the market has made its decision on is that the worst is now behind this company. Is that true?
Man, I'm so glad Linkster's on with me today, because her and I have gone back and forth on this name for a long time. And the last time I was on set, we talked about Nike again in my value portfolio. And sometimes you buy value stocks and put stocks in a value portfolio for the turnaround. And we bought this stock because operationally we really thought it was going to be turning around. We saw that from a valuation and earnings growth basis, this stock had a lot of problems. But obviously with the news today, it's starting to come out to fruition with respect to these operational issues that they've changed. So that's the quintessential type of value bottom. We feel good about the report, and we still like the stock.
I mean, let's be clear, though. Nothing's happened yet, right? You
No.
can't claim any bit of victory on any bit of turnaround. You're just thinking that maybe now the turnaround can actually start, right?
Yeah, I mean, I think when you start to see these types of things and you're starting to see a move like this and people start to believe it, and we're not the only ones kind of thinking that the turn is coming. So, again, it's affirmation, confirmation. It's still early, but, you know, last time I checked, when you're an investor, you want to be early, not be chasing things after they've moved.
Sure, but I mean, you know,
There was absolutely nothing good in the quarter. Nothing good whatsoever.
I'm hand it to Steph.
I mean, direct down 14, digital down 10, North America down 11, China down 21. They haven't invested in their products in years. That's the problem. And now you have so much competition. I have no doubt they'll get back. But I just think this is at least a 2-year turnaround. I'm all about turnarounds. You all know that. But this one, I think you have.
Well,
I would sell it today.
You would sell it?
Yeah, I would.
Wow, because that's a statement in and of itself. When the turnaround guru on the halftime report takes a look at this and says, "I'm not even touching it now." No. Brian, what do you make of that? I'd sell it here for all the reasons that Steph just articulated to you.
Well, we run several different type of benchmarks and portfolios. This is only in our value portfolio, and I love when you hear people say this is a very small position.
Dude,
blah,
come
blah,
on,
blah,
man.
blah,
Just play it straight with me, man. Just play it straight with me. She says sell it. She doesn't believe in the turnaround. I don't care about 4,000 different portfolios and which one you hold it in, man. Come on.
It's 10 different portfolios. We've been doing it for years. If Steph's going to be a tactical investor and look at Nike, she should be selling. If I was a tactical investor, I'd be selling.
She's not a tactical investor. She's not an in and out today, tomorrow kind of investor. She's not that. She's as long-term investor as we've ever had on this program.
I'm not going to question her process in terms of turnaround. If she doesn't think it's a turnaround, it doesn't turnaround. For my perspective, owning it in a value portfolio, we own it today.
He should sell.
Sell it. I would sell it. I would.
Why do you think he should sell it?
I mean, we talk about being early, Belsky. We sold it in April of 2022 at $135. It went down 60%. I use this pop to sell calls or get out of the position. I agree with Stephanie.
All right, let's go Boeing. Upgraded today to buy from neutral. Remember, this is all Dow stocks on the move today. Target 275 from 180. Steph, I'll give you this one. Boeing.
Well, it is up.
Speaking of turnarounds,
it's up 55% from its low. So is GE. They trade on the same, right? GE delivers the engines, but it is a turnaround. It's the CEO doing a really good job at executing. Last quarter, I think we talked about, it was the first quarter in like 5 years they had operating margins that were up year over year. So the deliveries are coming on track. They're going to increase them, and the cash flow is going to go from negative $2.2 billion this year. I think it could get to $12 billion as they deliver more planes by 2027. And the stock is trading at a big discount to its EV to EBITDA, EV to free cash flow multiple, 24 times versus its historical average of 38 times. So I like the CEO. He's doing a good job. Duopoly, too.
All right, Brian, Disney, 137, the new target at CFRA. They reiterate their buy. 140 is the new target at Guggenheim, and that stock is at a 52-week high today.
Yeah, Disney's actually done a pretty good job in their streaming stuff. We own it in a couple portfolios. We've minimized our positions because we prefer Netflix and other areas in communication services like Spotify, but we're obviously happy with the results that we've seen lately, and we endorse these upgrades. We like that a lot.
What portfolio is this in, Brian?
Wow, I just can't.
We'll get the headlines now with Silvana Hanau. Hi, Silvana. A record-setting day that has stocks at their highs. Let's get to Steve Kovac now for more on tech's big rally with that sector and the NASDAQ both at record highs. Steve?
Yeah, that's right. We're doing sectornomics today, and tech is the focus. Now, the sector hit a new high this week and is up 8% so far in June. We're digging in on cybersecurity, though. That's, of course, because of the heightened interest in stocks like Fortinet, Palo Alto Networks, and CrowdStrike after those U.S. strikes on Iran last weekend and the threatened Iranian response. The CEO of CrowdStrike, by the way, George Kurtz, says he's already seeing an impact. Take a listen.
First, we've seen an increase in denial of service attacks that happened right after the bombings. We've seen increase in website defacements. And really what we're starting to see is some other activities in the pre-positioning of wiper malware and those sorts of malware activities which are linked to Iran.
Now, after that, we have CrowdStrike up almost 4% since that U.S. attack on Iran's nuclear sites over the weekend. Stock is also up 44% so far this year. Meantime, you have Palo Alto Networks, which has also seen a pop up more than 2.5% just in the last few days, and shares of Fortinet up 4% so far this week, about 10% in all of this year. And then the HACK ETF, that's the hack ETF from Amplify, it's up more than 3% so far this week, Scott.
All right, Steve Kovac, thank you very much for that. We talk about these stocks all the time. Which, Bryn, you choose to play through the bug ETF. Why that versus some of the individual names?
Well, I think the names rotate, but first of all, the bug is very focused versus the other ETFs just on cyber. Some of the other ETFs really move outside of that. But in terms of the individual names, you get Zscaler, Fortinet, CrowdStrike, and CrowdStrike is the top 3 holdings, and it's market cap weighted. So I just think like long term, I don't have to walk through and worry about if they have a hack or what they miss a quarter. I can just own that, I feel, for a longer period of time than one individual name, which may or may not be the winner 5 years from now.
Steph?
I think the big 5 get bigger. We have 4,000 cybersecurity companies in the world. Some are public and some are private. And none of them talk to each other. And we have cybersecurity companies themselves that get attacked. So I think you're going to see massive consolidation. I think cybersecurity is bigger than AI. And it's because of AI, cybersecurity is going to be bigger. And so I'm playing it through. CrowdStrike, certainly. It's the best of the best.
Consolidation among the big names?
Yeah, I do. I think the big 5 get bigger and bigger, and they're going to buy the other companies around the world. Some of them might be small, but because they don't all offer the 100% to their customers. So they'll buy capabilities, and that's what I think you're going to see. CrowdStrike is amazing. Palo Alto's been a laggard, and I think it's just a much better value at 11 times price to sales versus 30 times price to sales for CrowdStrike. But I like them both. I like the whole space.
Everything almost looks a laggard compared to CrowdStrike, which is up 47.5% year to date.
Yeah.
I mean, Zscaler is up 75, so everything's lagging that. You have Palo Alto also.
I do, but just broadly speaking, I agree with the basket idea. Morgan Stanley projects that cybersecurity spend will surge from $15 billion, which was 2021, to $135 billion by 2030. So I think they're all well positioned.
All right, coming up, time for a debate. Tesla versus Uber the next 6 months, because the first 6, no contest. Uber's up 51% year to date. Tesla's down 19%. Bryn and Brian own both. Kevin only owns Tesla. Stephanie Link only owns Uber. Which is going to have the better second half, and why?
Well, I think Uber, obviously, because I own it,
well,
right?
I mean,
but it's actually lagged in the past
necessarily.
year. It's only up 29% in the past year. Tesla's actually up 64% in the past year. But I like Uber because it's diversified. They've got ride sharing, they've got food delivery, they've got new products, and I think the AV market, it's big enough for both of them. I mean, the total addressable market is going to go from $1.5 billion this year to $13 billion by 2030. That's a 32% CAGR. They both can win, but I think the diversification, and oh, by the way, given the growth trends, 15% gross bookings and 35% EBITDA growth for 26 times, that valuation makes more sense to me.
Is the whole bet on autonomous to answer the question? Because if you just go by what Tesla's sales numbers are, that doesn't leave you feeling very upbeat about what the near-term future looks like, especially if you take a look at the international sales, which can't get out of their own way still.
Well, Stephanie brought in logic, math, and fundamentals.
What are you bringing in?
Robots and self-driving.
Okay.
And Elon Musk. So I just think both are diversified. It's not an either-or story. One's not going to cannibalize the other. I think you should own both in a diversified portfolio. We own Tesla because of the robots, and we believe in the full self-driving.
Bryn, you do own both, as I said.
If I can do a total return trade and sell calls against Tesla for the next 6 months, which I'm in, I feel like the Tesla total return selling calls outperformed Uber's. If I have to take away my calls, I'm going to go with Steph and say Uber.
Okay. Belsky.
Yes, we own both. What I think is interesting, Scott, is that in the fourth quarter, obviously, with the news that autonomous cars, Uber got hit and Tesla went up. Some of that was due to what was going on politically as well, and now they've kind of flip-flopped. Uber, I think, don't discount how important Uber has been to the industrial sector. Industrial's been one of the best, if not the best, performing sector year to date as more and more funds and flows go into industrial. So we would say that Tesla's got a catch-up trade coming, but from a total return perspective over the next 12 months, we think, too, that Uber will outperform.
So if you had to buy one fresh today, it would be Uber?
Yes, it would be.
All right. We'll take a quick break because who knows what this market's going to do. We're pretty much highs of the day, barely off of that. Let's do finals. Bryn Talkington, what you got?
KKR just broke above the 200-day. They're in big-time fundraising mode. I think the stock goes higher.
All right, well, we said private equity picking up too. Financials at a record high. I know it's like a broken record because it's more than just tech today. Brian Belsky.
Lululemon, LULU, quickly becoming a value stock. Again, another one of these turnarounds that we think can do very well.
Quickly becoming a value stock. You've been watching this thing. It's been a value stock for a while.
Sure has. 15 times earnings. We'll take it.
Maybe a value trap stock.
We'll see.
Okay. Kevin Simpson.
Meta, don't fight the tape. AI-powered ads, scale AI, think growth meme, beat on real scale.
Okay, Rockwell Automation.
All right, good stuff. I'll see you on the bell.
Welcome back to Overtime. Stocks closing off the highs of the day as President Trump calls off trade talks with China, but still higher. The S&P hitting a high of 61.87, briefly dipping into the negative territory before closing higher by about 0.5%. The Nasdaq also hitting a new record high and finishing up about 0.5%. Nike, a huge winner after its results last night. You can see finished up about 15%. Had its best day since 2021. Investors were hoping the worst is over and that the comeback is starting to materialize. But joining me now is Gerard Cassidy, co-head of Global Financials Research at RBC Capital Markets. And Gerard, we turn our attention back to these bank stress tests that we just got from the Fed. So what is your takeaway on the results we just got, especially given the fact that we have, 2 full working days before the banks can start to make announcements about what it'll mean for buybacks and dividends?
Sure. Thank you, Morgan. And the results across the board were very positive. As you pointed out in your comments, all the banks passed. And what was noticeable was the pre-tax, pre-provision net revenue, known as PPNR. That was more robust this year. And the Fed pointed out the reason for that was that the industry is more profitable, driven by 2 factors: robust capital markets revenues, but also a resilient net interest margin. Also, as you pointed out, the actual decline in capital wasn't as severe this year, even though the stress scenarios were very severe. So I think overall, I think investors should be very pleased with these results, which, to your point now, the banks will review the results, and then some of them will come out as early as Monday with possible dividend increases and also share buyback programs.
The banks have had a good run here in anticipation of this. It seems JP Morgan and a few of the other big bank names have been hitting record highs on a near daily basis as of late. Can that continue?
I think it can, because there's a huge change going on in Washington with the bank regulators. You saw it in the commentary from this report. Michelle Bowman, as you know, is the new vice chair of safety and soundness for the Fed. And in an April release, they talked about the changes that might be coming for this stress test. There will be more openness, more transparency. That will be discussed later in the year. The big news, though, Morgan, is, of course, the Basel III endgame. She's going to need to address that, which she plans to, and she's taking a more realistic approach versus what was proposed back in 2023. So I think that's why investors are positive on the banks, why we're positive, that the deregulation outlook is quite positive. And Treasury Secretary Bessent has also pointed out that the corset around the banks due to regulations needs to be loosened up so the banks can become more involved in the economy to help the economy grow faster. And I think that's why you've seen the stocks do as well as they're doing.
So what do you buy here? What are your top picks?
I think you can look at Wells Fargo as one of the top picks because, as you probably recall, they just had their asset cap lifted. So there's going to now be opportunities for Wells to grow their balance sheet. In addition to that, they had about 13 cease and desist orders since their CEO came on board, Charlie Scharf, back in 2019. And then I think 12 of those have been lifted. 6 or 7 this year have been lifted. So that means the cost, and they have pointed out the cost of adhering to all these regulations is about $1.2 billion. So I think that cost won't certainly be going up, we don't believe, and over time probably kind of goes down. But more importantly, they get to grow that balance sheet and grow revenues. And I think capital markets and investment banking will be the focus of that company, along with their credit card program. The other name that people can look to as well is Bank of America. Bank of America is probably going to show some of the best net interest income growth this year out of all the big banks, which could take their stock higher as well. And in both cases, as well as with JP Morgan and Citi, there's going to be tremendous opportunities to give back excess capital. And I think you're going to see that with the money centers and the regionals, like a Fifth Third, a Regions, and an M&T are all names people can look at.
Okay. Of course, you're seeing a lot of the bank stocks move higher here in overtime after hours on these results, including Wells Fargo up about 1.5% right now in real time. Gerard Cassidy, appreciate it.
Hello, everybody. Welcome to Blue Cloud Trading. My name is George. It's Sunday. It's June 29th as I'm recording this video. But we took some clips from CNBC on Friday so that we can take a look at the stocks that they talked about in the show. We're going to look at about 16 stocks and ETFs that they discussed, plus, of course, some of the Mag 7 stocks that were also discussed, and, of course, the indices. I did cover the sectors in the members-only video over the weekend. I did make a video this weekend on Saturday. This is what it looks like right there. If you scroll up down on my homepage here, okay, about 20 hours ago I posted it. It's a 49-minute video where I go over the sectors, 20 new stock ideas for next week, for this coming week, as well as my entire portfolio, where I share the trades that I placed during the week. I do this every weekend. So consider becoming a member. How to become a member? You just basically, once you've subscribed, right, you will have the ability to you'll see this little plus sign pop up, and you click on that once again, and then you'll see these 3 tiers. Blue Cloud Supporter, Blue Cloud Trader. Now under Blue Cloud Trader, you'll be able to see those videos. Under Blue Cloud Legend, the next level up, you'll also be able to access the daily trade updates that I post. This is where I post them, right here next into the it's called Membership tab. That only pops up once you've become a member. So as you can see here, if you haven't subscribed, you'll only see these tabs. The second that you do subscribe, and I'm sorry, not subscribe, but become a member, it basically pops up right next to the posts membership. And you click there, and that's where you'll find all the posts, including some of the daily scans that I place from the proprietary scanner. Okay, and for those of you who are new to this channel, I use the Ichimoku indicator. So yeah, that's what we're going to look at. We're going to use this indicator. It's got a cloud, okay? It's got a couple of moving averages here, the 9, the 26, takes the midpoint of the last periods to draw these plots these moving averages. And another interesting feature is the fact that the cloud actually projects into the future, 26 periods into the future, in fact. So what it does essentially is it takes the midpoint of these 2 moving averages here, right, and projects that 26 periods into the future. You'll see the 20, that's called the Senku span A. And this purple line here is the Senku span B, which is derived by taking the midpoint of the last 52 periods. All right, and then it projects that 26 periods into the future. And you've got your Chiku span, that white line, which is today's closing price, and that is projected 26 periods ago. So we're looking at an indicator that has some data from that's projected into the past, so we can see where that line is in relation to the candle 26 periods ago. If that white line is above the candles, that's very bullish. If it's under, like it was over here, it's bearish. So it helps us to really derive, get a sense of what the direction of the market is, or stock or ETF, whatever, on different time frames. Right now, we're looking at the daily chart. We might look at some weekly charts as well in this video. So what happened over the weekend? I'm sorry, not over the weekend, but over the week is the market actually had a nice breakout above this 613.23 level, and we're now experiencing all-time highs. In fact, if we look at Friday's market, let's take a look at that real quick here. You'll see that the Dow Jones was up 1%, right? It did pull back around 12 o'clock. There was a little bit of a decline midday, and it lasted until 3 p.m. And then around 3 p.m., things started to get more bullish. Same thing happened here with the NASDAQ. So it's starting to look, it even got into bearish territory between 2:30 and like 3:30. But then it had a strong finish at the end. So it was up 0.52. So was the S&P 500, same thing. And the Russell 2000 was just up 0.03. So not a big move for the Russell. When we look at the heat map, you can see some of the stocks here, like the Amazon was up 2.85, Google was up 2.88, Nvidia was up 1.76. The industrial stocks did well. Utilities were mixed. Healthcare, some of the big stocks like Eli Lilly, AbbVie were not that, didn't do so well. Palantir was down 9.37%. Microsoft down slightly. Oracle down 1.21. Tesla was also down 0.66. The sectors that performed well were consumer cyclical, communication services. The two that didn't do so well, energy and basic materials this week. For the 1 week performance, it was communication services at the top, up 5.73% for the week, and then energy was down 2.98. All right, so let's get into the stocks now. We're going to look at, we'll start off with the indice ETFs here, the index ETFs, the SPY, for example. Like I said, it's hitting all-time highs, broke through that level. This is all very bullish. If we look at the other indicator that I have down below, it's called the directional movement index. I've got it at a setting of 9. And it basically is just like, you know, we get the positive DI 9, negative DI 9. So there's the positive DI 9. When that's above the negative DI 9, we're in bullish territory. The ADX is the white line. If that white line is basically on an incline, it's moving up, that means that the momentum is increasing. That's very bullish. When it's declining, not usually a good time to be adding positions, basically. So the SPY looks good. How about the QQQ ETF also? You know, this one actually broke out above its prior high back here of around 540.81. That happened actually on Wednesday, June 25th, and it's basically continuing its move up. Dow Jones, that happened on Thursday, broke through 432.06. Now, it didn't hit all-time highs, though. It did break through that prior high right there, but we still have some resistance above at 451.34. That's going to have to break through that to experience all-time highs for the Dow. But it was up the most, 0.94%. So it's got a little bit of room here. Let's see, it's about maybe 2.8% away from the all-time highs. Russell 2000, okay, once again, stalling at that 200-day moving average. So you can see here, a couple of days dropped. Over here, it's been stalling. It pierced it, got above it, and then finally closed under the 200. That's the dotted yellow line that you see right there. Not good. I do like the ADX moving up here. I like the positive DI moving up, negative DI moving down. That's all bullish, but this is a reversal candle. So Russell 2000 could not participate in this move up. The VIX also dropped a little bit, down 1.63%. European stocks, like the Euro Stocks 50, which is the FEZ ETF, basically coming back to the 60.14. That's that prior high. We may need to adjust this one for these new highs soon. It still has some work to do. You can see the Tenkan-sen, the faster moving average. The green line is under the slower one. So that's not good, but we do have a bullish directional movement index. You see that green line popped above the negative line, so that's good. All right, let's look at the stocks talked about in the show. Not all of them, but a bunch of them. Like, we'll look at the strongest ones first. I've got them all flagged here. Here's Boeing. So here it is on the weekly chart above the Ichimoku cloud, looking good on the daily chart as well. High volume, finally starting to show some strength. The only problem with this one is that fundamentals are still not that great. Profit margin is still negative 16.58. Operating cash flows negative 10.3 billion. But the technicals look good. There's a lot of interest in this stock right now. BUG, which is the ETF for cybersecurity, consists of many stocks. Also looking good, but it was down 1.05%. If you just look at the technicals, though, it's in this nice strong uptrend. It's above the moving averages on the daily chart and on the weekly chart as well. Disney on the weekly chart broke through this 118.63 weekly level. That's very positive. Here's on the daily time frame looking good too. We're getting close to that 126.68 level of resistance. That is not an all-time high because you can see we've been up around $205 or so in the past. We're at 122 right now. ETN is the Eaton Corporation. That's in the industrial sector. And this one here looks pretty good. The only problem with it is the fact that we've got a reversal candle here on the daily chart on Friday. But it was up 1.46%. Here's the weekly chart breaking through the Ichimoku cloud. And another interesting thing that just occurred here is that the Senkou Span A, that lighter colored blue line, the future part of the cloud, it crossed above the Senkou Span B. That's also very bullish. And another interesting thing, if you look a little closer here, you can see the Chico span, the white line was under price. It got above it. That just happened this week. So this is a weekly chart. All right, let's take a look at the next one, GEV. Now, GEV is actually one of the stocks that's in my portfolio. I added this one back on May 28th. It's still moving up. Here's the daily chart. Looks pretty strong still. It's still in my portfolio. Hack is an ETF for cybersecurity. This one looks pretty good on the daily and on the weekly chart. I like that one, even though it was down 0.48% on Friday. Momentum Factor ETF, which is MTUM. This one looks good, up 0.24%. Here's the daily and the weekly. Notice how price is above the moving averages, the cloud, that's what you're looking for. PWR broke through the 365.88. This is Quanta Services. That happened right here. It broke the January 24th high, right? And that happened this week. Here's the daily chart. So all-time highs here for PWR, looking good. Roblox, looking good. RBLX is the ticker symbol. Very strong uptrend. Profit margins are negative 22.94, but they have been improving. If we look quickly here at the, we'll take a look at the fundamentals. You can see that the sales have been improving, that have been increasing year over year. And if we look down at the statements, the free cash flow, check that out. Very, very high, 427, all right, in the last quarter. And then what about, let's go to the income statement here. Take a look at the net margins. Net margins have been improving. Even though they're negative, they have been improving. You can see from 2023 where it was negative 42, it's negative 21 now, 2 years later. So, you know, that's a positive. And the company itself has performed pretty well as far as the, year to date, it's up 82%, 82.49. Some of their other ratios here, like the price of sales is pretty high at 18.67, but it's a high, it's a in-demand stock. So a lot of people like this stock right now. Okay, let's keep going. ROK, that was Stephanie Link's final trade. That one broke through the 328.90. I like this stock right now on the daily and on the weekly chart. You can see it's looking bullish. The next level of resistance is 348.52. Okay, let's keep going. Uber. Okay, Uber came up to 93.60 this week and then reversed course. So that's what that piercing line right there means. If we look at the daily chart, okay, it came to that level and then dropped on Friday, down 1.71. So I would not be adding here. If you're holding a position, that's totally acceptable because we're still above the moving averages, we're still above the cloud, but I would not be adding a new position in Uber at this particular time based on the location of price in relation to the resistance level. Financials, XLF coming close to 52.63. Same thing, it broke through this little level, but it's not that far away from the next level of resistance. It's only it's only 1.27% away from that level. So I'd hold off on XLF unless you already have a position. I wouldn't add a new one is what I'm saying. The directional movement index does look very strong though. What about KKR? Now this one here is not flagged, and the reason it's not flagged, even though it looks great on the daily chart and it broke through that 200-day moving average, that was Brin's final trade. Well, if we look at the weekly chart, it's still stuck inside the cloud. So I like to look for those stocks, like I said in the past, that are strong on both time frames, weekly and daily, and we don't have that. The Chico span is still under the price on the weekly. Price is inside the cloud on the weekly, and the future cloud is still bearish. Senko span A is under the Senko span B. Lululemon. Okay, that was Brian Belsky's final trade on Friday. Now, this one has reached this level of 226.01, and it looks like it's stalled, which is good. Doesn't mean, however, that this is definitely going to bounce next week or the week after. So it's still under the cloud. I would not be jumping into this one. Nike is still under the cloud. Brian Belsky likes this one still. It did pop up 15.19%. Broke through the Kijunsen, the 26 period on the weekly. On the daily chart, it also broke through the cloud and got above the 200. But if you look closely, a lot of profit taking took place here. That upper wick represents selling that happened towards the end of the day, and price finalized and closed at 72.04. At one point, however, if we switch it to the 5-minute chart, we can see that it reached a level of around $74.24. It dropped 2.9% in a very short period of time. So that tells me there's a lot of selling happening there. And so for that reason, I would not be recommending jumping into that. Plus the fact that it's under the weekly cloud. PANW, Palo Alto Networks, is looking okay, but the problem here is it is in a consolidation stage. You can see that right there. It's hitting these highs multiple times and it's stalling. So not the time to be jumping in, even though it looks good technically on the Ichimoku on the weekly. On the daily, you can see on Friday, there was some weakness. It got under the Tenkan-sen, the 9 period is down 0.87%. All right, and let's look at the Mag 7, not all of them, but some of them. The other stocks are in my portfolio, and I share those with members. So Google it had a nice day. It was up 2.88%. It happened in high volume. The directional movement index became kind of positive right there, but the ADX is still going sideways. The problem with Google currently still is the fact that on the weekly chart, we're still inside the cloud. We've got Tenkan-sen under Kijun-sen, meaning the faster one is under the slow moving average. Chikou span is still under price, and the cloud is still bearish. So this could be a short-lived little move up, is what I'm saying. We don't have confirmation yet. Tesla inside the Ichimoku cloud on the weekly, so I'd stay out of that one. All right, there's the daily as well. Amazon, on the other hand, popped on the daily chart. High volume, ADX moving up. That's the kind of thing you want to see. After a consolidation stage right here, it broke that resistance and it developed that beautiful candle. Now, it's most likely to reach, or that it's going to shoot for the 233 level. Will it reach it? I don't know, but that's about another 4.3% away from the current price. I like the daily. Let's look at the weekly. Weekly chart looks really good too. We can see the the future cloud turned bullish right there. Senko span A crossed above the Senko span B. Price is above the moving averages. Let me get rid of some of these lines for a moment. The Chikou span, however, is still under the candle. That's the white line. Okay, and the faster moving average still needs to cross above. So we're almost there. I might be adding Amazon next week. Let's put it that way. Apple is on the weekly chart still under the cloud. So I would not be adding here. It's looking pretty depressed right now. You can see the lower high here. It's in a downward trend. All right, we get a lower low from the prior one. We have a lower high from the prior high. Hence, this is not ideal time to be adding on the weekly chart. And here's the daily chart, also stuck in this consolidation stage. Wouldn't you prefer to own a stock that's actually moving, that's in demand, that people want to actually be purchasing right now? It's just kind of stuck. And I think it has a little bit to do with the potential tariffs that, the tariff situation, like I said, hasn't been resolved, and Apple will be affected quite a bit because of its exposure in China. So, to China, as they say, right? So we're gonna find out. We're gonna find out what happens. Again, if you guys want to become members to Blue Cloud Trading, you click the subscribe plus button. After you've subscribed, this will pop up. You click that. It used to say join, now it says subscribe plus. I don't know why they did that. It's confusing. But and then once you've done that, once you click on that little button, you see the 3 little tiers here. Select Blue Cloud Trader if you want to get the exclusive member-only videos. Blue Cloud Legend if you want the daily trade updates, right? And those will pop up right here under membership once you've become a member. And if you like the software that I'm using, the TC2000 software, really easy to get this as well. From the same page, Blue Cloud Trading homepage, click here where it says 9 more links. Click on that. You'll see the description of my channel. Scroll down a little bit. Right here, where it says $25 coupon for TC2000 software. You click on this link. You enter your email in this box right here. If you have a Windows laptop, you can download it for Windows. If you want to view the software on you can use the web-based version. It's like there's a web-based version of this. There's also for Mac, if you have the Parallels, you're going to need Parallels for a Mac, or you'll have to use the web on a like a Mac laptop or computer. There's also a downloadable app for the mobile. Okay, so that's another thing to check out. And you check out the pricing right here. You can see the different software plans. The monthly is either $10, $29, or $59.99, and I recommend the gold because it has a lot more features, as you can see right here, than the silver. There's not a whole lot you can do with silver. You can see the layouts, you can see the charts and watch lists, but you can't draw on the charts. So what's the sense of it? And you can't set up alerts. You can't check out fundamentals. You can't really do anything. So I recommend the gold. Pay $5 out of your own pocket and try the gold out. Now, if you do annual, that brings down the price to $25. Okay, so $24.99. So you'll get 1 month for free. And if you do biannual, it brings down the price to $22.49. And here are the features for the Platinum. If you're interested in more alerts, if you want to get that $300 discount per year for the brokerage account, because they do have a brokerage service that you can look into as well. You just click on the brokerage right here. Why trade with TC2000? Check all that stuff out. I like the software. I like the brokerage services. They're very good. They're connected to Interactive Brokers. All right. All the processing goes through Interactive Brokers, which is great. Anyway, that's going to do it, folks. Thanks for watching. Thanks for supporting the channel. For those of you who have become members, whether you're a Blue Cloud supporter, Blue Cloud trader, or Blue Cloud Legend level member, I appreciate all of you guys. Thank you for subscribing to the channel. We're trying to reach 20,000 subscribers. So click that subscribe button, hit the like button, share this video with someone that might be interested in seeing it. And I'll catch you guys all in the next video.